$7 trillion. That's how much the Association of Certified Fraud Examiners estimates in their annual report to the nations that the global economy loses each year due to fraud. That's how much they estimate you and I don't have because fraud criminals took it and made it their own. That's a big number. That's a lot of money. But what I want to tell you about today is how fraud works and what you can do to stop it. There are two simple things that I'm going to teach you how to do that you should apply in your churches, your clubs and organizations, and your businesses to make sure that fraud doesn't affect you. The first thing that I'd like to talk about is how fraud happens. Even though there's trillions of dollars of fraud committed each year, all of these different kinds of fraud fall into three main categories: asset misappropriation, corruption, and financial statement fraud. Let's talk about the first one first, asset misappropriation. Even though you may have never heard those words before, you've definitely heard of what asset misappropriation is. Because all asset misappropriation means, it's fancy accounting words for stealing. Stealing, just taking something that isn't yours, that's all it is. Asset misappropriation accounts for about 85% of frauds, and they usually run about $100,000, more or less, according to the report to the nations. One of the scariest things about asset misappropriation frauds is that according to the report to the nations, they usually take about 18 months to be discovered. Let me give you an example of one that took even longer than that. Michael Knapp, in his book Contemporary Auditing, relates the story of the Goodner Brothers Tire Company. It's a true story. The Goodner Brothers ran their own tire company along with a friend who they'd known from high school. They thought they knew him very well. What they didn't know about him is that in addition to his passion for selling tires, he also had quite a passion for casino tables. And in order to finance his habit, he committed the fraud of asset misappropriation, taking money that wasn't his. Every day, he would sell some tires just like he was supposed to, but also every day, he would sell a few tires and not take them out of the inventory, and not give the money to the company. On books, the tires were still in the warehouse, and the money was really in his pocket. So he was selling things, but actually taking the money for himself to finance his gambling habit. This was a form of asset misappropriation, and it lasted for years because the Goodner Brothers did not do one of the two things that I'm going to teach you to do today, which is to verify. They didn't go in and count the tires, not for years and years, and this fraud cost them hundreds of thousands of dollars, when it could have easily been stopped if they had just done quarterly verifications to see if there were actually as many tires in inventory as their friend claimed there were. The second type of fraud is less common, but actually more expensive when it happens than is asset misappropriation. The second type of fraud is corruption. Now, we usually think of the word corruption and think of some sort of government official in a far-off place, or maybe our own politicians. But what corruption means is any time that someone uses their own position of power for inappropriate gain. For example, Rachel, imagine that you are on the board of your church responsible for taking care of the lawn and yard of your church. You've received two bids to do the work. One's by a great company with a low price, and the other is by a terrible company with a high price. But the terrible company has offered that if you accept their bid, they'll also take care of your personal lawn care needs for free. What you have been offered is an opportunity for corruption. You're not a government official, but you still have the chance to commit fraud in this way. Now, this type of fraud is more difficult to detect, but using the tools that I'll talk about in a moment, you can prevent these sorts of frauds from happening. Corruption, like other types of fraud, can happen anywhere. It doesn't have to be something big and far off. It can be in your local church, your local business, your local organizations. The third type of fraud is the one that's most costly on a global scale, even though it's the one that happens least frequently, because each individual instance is extremely costly. The third type of fraud is financial statement fraud. We think that this doesn't affect us, but it does. All of us, hopefully, have some sort of 401k, a tool to plan for retirement. Those 401ks are invested in companies that publish financial statements that are sometimes fraudulent. The most famous example of this is Enron. Enron published fraudulent financial statements, convinced people to invest in their company, and then lost all their money. Many people were out of their retirement accounts. In fact, millions upon hundreds of millions of dollars were lost in this financial statement fraud. The same tools that I'm going to teach you to use today are the tools used by government auditors to work to try to prevent this sort of fraud from happening. Even though you obviously can't go in and use these tools on Enron to make sure they're not cheating anybody, I think it's good to know that the same tools that you can use to protect yourself are the tools that regulators are using to protect you. So now that we've talked about the three types of fraud, asset misappropriation, corruption, and financial statement fraud, let's talk about how it happens and why it happens. Fraud happens when all three parts of the fraud triangle are there: opportunity, rationalization, and pressure. Pressure is the need, the so-called need, to commit fraud. It can be anything from I need to pay medical bills to I need a bigger boat. Pressure is something that we can't change. It's inside the fraudster's head. Rationalization, also something we can't change. It can be anything from I deserve this boat because my brother has a boat to they don't treat me terribly at this job, so it's really nothing if I take $100 out of the cash register. Again, something inside their head, something that we can't change. But all three parts of the triangle have to be there. If we can pull out one part, make the triangle collapse, prevent fraud. The part that we can pull out is opportunity. This is as is explained in a certified fraud examiner's book, Charles Hall's book, The Little Book of Government Fraud Examination. And even though it's for government fraud, it still applies. Now, the way that we can take out opportunity and close the fraud triangle, protect ourselves, and prevent fraud from happening is to do two simple things: enforce dual control and verify. As Ronald Reagan said, trust but verify. Checking behind somebody doesn't mean you don't trust them. It just means you're making sure they're honest. So dual control can be practiced in a very simple way. Always make sure that when there's cash around, two people are handling it. This can prevent a lot of asset misappropriation and is the easiest, simplest, and most effective way for you to apply fraud prevention methods to your local organizations. The other way is just to verify. If you own a company and your accountant says there's $1,000 in the bank, get the bank statement and check. Look behind him. I implore you to use these two methods of verification and dual control to protect yourself, to protect your employees, to protect other people from the dangers and effects of fraud so that we all can save our money.